Hey everyone, welcome back to my channel. Today we are tackling some common multiple choice questions about financial statements for sole traders. We will cover cash books, banking systems, and personal accounts. If you are studying for an exam or just want to test your knowledge, this video is for you. Let's get started. Gross profit is the excess of sales over cost of goods sold. Sales less purchases, cost of goods sold plus opening stock, net profit less expenses of the period. Gross profit is the excess of sales over cost of goods sold. So whenever your sales revenue exceeds the cost of goods sold, then that excess is what we refer to as gross profit. In other words, gross profit equals to the sales minus the cost of sales or the cost of goods sold. So when your sales exceed the cost of goods sold, then that excess is what we refer to as the gross profit. Net profit is calculated in the trading account, profit and loss account, trial balance, balance sheet. Now, net profit is calculated in the profit and loss account. Remember, the income statement has two accounts, or it has two sections. It has the trading account and then the profit and loss account. The trading account is to calculate the gross profit. Then the net profit is calculated in the profit and loss account. To find the value of closing stock at the end of a period, we do this by stock taking. Look in the stock account, deduct opening stock from cost of goods sold, deduct cost of goods sold from sales. So which of these is the correct answer? To find the value of closing stock at the end of the period, we do this by stock taking. So stock taking, sometimes it also referred to as inventory checking. That is the process of physically counting and verifying the quantity and the condition of the items held in stock. So question 3, the correct option is A. To find the value of closing stock at the end of the period, we do that by doing what we call stock taking, which is the process of physically counting and verifying the quantity and the conditions of the items held in stock. The credit entry for net profit is on the credit side of the credit entry for the net profit is on the credit side of the capital account. The capital account. Because after you coming up with your net profit, that net profit is going to be transferred into the credit of the capital account. Remember, when a business makes profits, that is net profit, the capital of the business increases. So that net profit is going to be transferred to the credit of the capital account. So net profit increases capital, and to make that entry of the net profit in the capital account, we make a credit entry. Which of these best describes a balance sheet? Which of these best describes a balance sheet? An account holding the book's balance? No. A record of closing entries? No. A listing of balances? Yes. Statement of assets? No. So when we try to look at all the options given, it is C that best describes a balance sheet. A listing of balances for assets, liabilities, and equity. We do that list in the balance sheet. So the balance sheet is a listing of balances for assets, liabilities, and equity. Then number 6, the descending order in which current assets should be shown in the balance sheet is the descending order in which current assets should be shown in the balance sheet is. Now, when you're preparing the statement of financial position, normally when we are looking at current assets are going to be listed in the order of liquidity. They are going to be listed in the order of liquidity. Liquidity, we are referring to something that can easily be converted into cash. Those assets that can quickly be converted into cash. Now they have said descending order, meaning that we have to start with those assets that are farthest away from being converted into cash, or that will take some time for them to convert them into cash. So stock, debtors, bank, cash. Of course, we cannot start with cash. If you are looking at the descending order of liquidity, we can't start with cash. Cash will be the last item. Debtors, stock, bank, cash. No, we can't start with the debtors. Stock, debtors, cash, bank. No, cash has to be the last item. So in the descending order, if you're looking at those assets that will take time for them to be converted into cash, of course the order should be stock, because stock will take time for it to be converted into cash, followed by debtors, bank, and then cash will be the last item. So this is liquidity. Because I've told you that liquidity, that is all about how quickly can we convert an item into cash. But we have said descending order, so you have to start with those assets that will take time for them to be converted into cash. So normally inventories or stock take more time to be converted into cash than the data. So it is stock, debtors, bank, and then cash itself as the last item. Which of these best describes fixed assets about to be used in the business? Not really. That may not be the best description of fixed assets. Items which will not wear out quickly. Fixed assets wear out. Are expensive items bought for business? Yes, they are expensive, but that may not best describe what fixed assets are. Are of long life? Yes. And are not bought specifically for sale. So here the answer is 4. 4 is the correct option. That option best describes your fixed assets. They are of long life and are not bought specifically for sale. Carriage inwards is charged to the trading account because it's an expense connected with buying goods. So the answer is A. The other options are wrong, or they are incorrect. Carriage inwards are charged to the trading account because it's an expense that is connected with the buying goods. Number 9, given figures showing sales, opening stock, closing stock, purchases, carried inwards, and the cost of goods sold figure is. How would you get cost of goods sold? To get cost of goods sold, cost of goods sold equals to the opening stock plus purchases less your closing stock. Therefore, opening stock is how much? 1,300 plus the purchases of 6,400 minus closing stock. No, you have to first add the carriage inwards on the purchases because carriage inwards, that is an expense that is connected with buying goods. So I have to first add the carriage inwards of 200, then I will minus the closing stock of 900. So how much will be the cost of goods sold? Get your calc and then we find out how much the cost of goods sold is. So 1300 plus 6400 plus the 200 carried inwards minus 900, that gives us 7000. So your cost of goods sold is 7,000. The cost of putting goods into a sellable condition should be charged to trading account, profit and loss account, balance sheet, none of these. Now the cost of putting goods into a sellable condition should be charged to the trading account. Should be charged to the trading account. Why? Of course, the trading account shows a gross profit or loss from buying and selling goods. From buying and selling goods. So, since the cost of putting goods into a sellable condition is directly related to the buying and selling of goods, those costs will be charged to the trading account. Suppliers' personal accounts are found in purchases ledger. The purchases ledger, that's where you find personal accounts of suppliers. The sales daybook is best described as part of our entry system containing customer accounts, containing real accounts, a list of credit sales. So here the answer is D. The sales daybook is a list of credit sales. Remember, all credit sales are going to be listed in the sales daybook, sometimes referred as the sales journal. Which of the following are personal accounts? Personal accounts, here we look at customers' accounts and suppliers' accounts. So debtors and creditors, those are the personal accounts here. The rest are not personal accounts. Buildings, that is a real account. Wages, that is a nominal account. So number 13, the correct option is 3 and 4. 3 and 4. So the answer is C. Personal accounts, those are accounts of customers and suppliers. When Lee makes out a check for shillings 50, now we're in banking system. We have shifted to the banking sector. When Lee makes out a check for shillings 50 and sends it to Yang, then Lee is known as the drawer. Lee is known as the drawer. Makes out a check for shillings 50 and sends it to Yang. A drawer, in the context of a check, a drawer is the person who writes the check and authorizes the bank to pay a specified amount to the payee. So Yang is the payee, Lee is the drawer. If you want to make sure that your money will be safe, if checks sent are lost in the post, you should not use the postal service in future. Always pay by cash. Always take the money in person. Cross your checks. Account pay only, not negotiable. Here the answer is D. The answer is D. So if you want to make sure that your money will be safe, if checks are sent, if checks sent are lost in the post, you should cross your checks. Accounts pay only, not negotiable. So meaning that when they are paying that check, they will give money to the account pay only. So that means that your check and your money will be safe. When banking money into your account, you should always use a paying in slip. You should always use a paying in slip. When you're depositing money into your bank current account, you should always use the paying in slip. A debit of shillings 100 in the cash account shows that If you balance up your cash account and you end up with a debit balance of shillings 100, it means that you have shillings 100 cash in hand. There was shillings 100 cash in hand. The rest of the options are not correct. Cash has been overstated. Shillings 100, no. Shillings 100 was total cash paid out, no. Total cash received was less than shillings 100, no. So when your cash account shows a debit balance, it means that you have shillings 100 cash in hand. Shillings 50 cash taken from the cash till and the banked is entered. Now this is a contra, cash bank. This is a contra. This is a contra. Cash has been taken out from the cash till and banked So here your bank is increasing, but then cash is reducing. So what you have to do, you have to debit bank column shillings 50 and then credit cash column shillings 50. Cash is reducing and then bank is increasing. So you debit the bank column of cash book and then you credit the cash column of your cash book. A credit balance of shillings 200 on the cash columns of the cash book would mean we have spent shillings 200 more than we have received. Yeah, the correct option here is a credit balance of shillings 200 on the cash columns of the cash book would mean, normally the cash column of the cash book should be having a debit balance, but when you find that now the balance is a credit one, then it means that you've spent more than what you have received. It's not cash in hand. If it's to be cash in hand in 200, then it would have been a debit balance as we have seen up there. The bookkeeper has made a mistake, someone has stolen shillings 200 cash, So it means that we have spent shillings 200 more than we have received. That is if your cash column of the cash book shows credited balance. Posting the transactions in books means making the first entry of a double entry transaction, not really. Entering items in the cash book, no. Making the second entry of a double entry transaction, something other than the above. Posting the transactions in the book, in bookkeeping, means what? Making the first entry of a double entry transaction, no. This one is tricky. Making entering transactions in a cash book, no. Making the second entry of a double entry transaction, something other than the above. When it comes to print, what is posting? Let's first see what posting is. Posting, that's the act of transferring information into the ledger accounts from maybe the books of original entry. From the books of original entry. So when we try to look at all the options available, I think I can go with C, making the second entry of a double entry transaction, because due to the fact that the first entry has already been made in the books of original entry, now it means that my second entry is going to be transferring information into the ledger accounts, and we transfer information into the ledger accounts by doing what we call posting. Yep. So there you have it. We have covered a range of multiple choice questions on financial statements. We have seen some for cash books, the banking systems, and personal accounts. But remember, understanding these concepts is very, very crucial for any sole trader or for any accounting students. If you want to dive deeper, consider exploring advanced accounting topics which I've covered in my previous tutorials: depreciation, inventory, valuation, and so on. Don't forget to like, comment, and subscribe for more financial insights. Thanks for watching. I remain your tutor, Senior Huntington. Bye-bye.